Westminster English or LSE English. We all know that the crisis has been a great test, not only for economic policy making, but also for many economic institutions. And I think it's a good moment to, after a year since the crisis began, to take a step back and have a look at what succeeded and what didn't succeed that well, what the strengths of the European and economic and world economic architecture are, and try on the basis of that brief summary to identify some of the main points that we have to think about in building the architecture and the policies of the future. I think we can all say that one of the key successes of economic policy making during this economic crisis, which distinguishes it from the great crisis of the 1930s, is the fact that governments did not surrender to the temptation of protectionism, the temptation of trade protectionism, or the temptation of what we call financial protectionism. I think when the economic history books of 20, 30, 40 years' time will be written, this fact will be seen as probably one of the key elements that decided that this crisis, in the end, will be far shallower than the crisis of the 1930s, even though the immediate effects, the first collapses in industrial production during the autumn and winter of 2008 were as steep, as rapid, in some cases more steeper and more rapid than those of 1931. And I think in this context, the governments of Central and Eastern Europe, particularly the Czech government, which had the presidency in the first half of this year, and the Polish government, which took a very strong stand on the question of trade and financial protectionism within Europe, have a right to be proud of their record. We went to Brussels at the beginning of March with a clear intent to tell the countries of the old member states that we were determined to stand together with the European Commission in defense of free trade and the free flow of capital within the European Union. I think this came as a surprise to many of our Western partners. They thought we were coming to Brussels to ask for money. We were coming to Brussels to ask for something and insist on something far more important. And I think but of course this was a victory that was gained not only within the European context, but also internationally. The main trading groups and main economic areas have not succumbed to protectionism either. On the other hand, I think we also have to say to ourselves that in the period leading up to the great crisis, it was sufficient that one of the key central banks of the world, I suppose the key central bank of the world, the Federal Reserve, was pursuing a policy that I think in retrospect we can all agree was far too loose, for it to be impossible for the Eurozone, for the European economy, to avoid consequences that in fact have turned out to be more severe than those in North America, at least this year. And I think that's an important sign, it's important proof that the euro isn't enough. Obviously, I'm not talking about a world currency, but we clearly need a degree of macroeconomic policy coordination, if possible, to try to avoid future problems of the same kind. Now, obviously, if somebody is determined to pursue a policy that's mistaken, you're not going to be able to prevent them from doing that, since, obviously, the question of national sovereignty will remain. But nevertheless, or the fact of national sovereignty will remain. But nevertheless, we can certainly be clear today that major policy mistakes by one important central bank will have effects throughout the world. Another issue which I think we need to face clearly is that in the post-crisis world, it's quite clear that we have a major problem with the Stability and Growth Pact. It's not enough to say that for the European Union and for the European Commission to say we are going to stick to the letter of the law on the Stability and Growth Pact. It doesn't matter to us if this year 20 countries will be subject to excessive deficit procedures, and next year even more countries will be subject to excessive deficit procedures. In that kind of situation, the credibility of the stability part of the Stability and Growth Pact is clearly severely undermined, and we have a huge job ahead of us to re-establish that credibility.